And we are live. Welcome to the very first BitBuy Trader Tuesday, hosted by myself, your favorite crypto trader, right? John Doe. And now every Tuesday, I'm gonna be giving you a short clip of trading tips to help you out with your crypto trading. Let's get it. So the first question is, what is the MACD? So the MACD is a trading indicator that is used in technical analysis when you're looking at a price chart. This is what it looks like right here, and it is short for moving average convergence divergence. It was created in the 1970s, and it does reveal a trend's strength, direction, momentum, and it helps you see overbought and oversold ranges, and also come with an average price range for an asset. Now that we got that covered, what does the MACD measure? The MACD indicator displays the price relationship between two moving averages. And in the default settings, it's calculated by subtracting the 26-period EMA exponential moving average from the 12-period EMA, and it produces what's called the MACD line. And that is this orange line right here. And then a 9-period EMA of the MACD is plotted on top of the MACD line. And you will typically see a histogram just like this added onto your indicator. And this measures the distance between the MACD and the signal trend lines. And if the MACD has a bullish crossover, then the histogram will be towards the bullish side above the zero line. And if the MACD has a bearish crossover, then the histogram will be towards the downside below that zero line. Now, a question you might have is, how do traders use the MACD? Now, traders look for a change in the trend using the MACD, and you can also look in the strength of a trend. And the first thing you look for to identify this is bullish crossovers and bearish crossovers. Bullish means the trend momentum is picking up, and bearish means the trend momentum is slowing down. And the MACD does work better on longer time frames, looking at swing trades. And if you pair the MACD with another indicator such as the 200-period moving average, then you will be at a better chance of being on the right side of the market. Now, here's some things to look for in the MACD. We have crossovers, so bullish and bearish crossovers. Right here, you see a bullish crossover in the MACD below that zero line, and price pushed upwards. Right here, we see a bearish crossover and price started moving downwards. Same thing here, we have another crossover, price up, and also price down. So it does help with being on the right side of price momentum. Another thing here is divergence, and this is when you see price continuing to push up, but the MACD is slowly losing momentum. So here we have one divergence example right here. We see the MACD histogram showing that momentum is slowing down, but price continues to push up. So indicating as price push towards those highs, there will be a divergence for price to have a correction, and that's what happened there. Same thing here, we have another bearish divergence in the MACD. Price continuing making highs, but MACD showing bearish momentum, and then price came and had a correction. And when you're looking at divergences, this can help to see overbought and oversold ranges using the MACD. The last thing here we're gonna cover for the MACD is rapid rises and rapid falls. So if you look here, as price rapidly comes down, the distance between these lines will become much bigger, and you will see the histogram also be much bigger. And that shows some type of high volatility. And as you can see, as that slows down, that shows a buy range. Now, same thing here, as we did get a rapid rise, price did push upwards, so that was showing that there is strong momentum towards the upside. And the same thing here in this range for Bitcoin, another rapid fall for the MACD, and price showing that there's a lot of momentum towards the downside. And that wraps up everything for the MACD, but keep in mind, it does not always work out perfect because there is a problem with the MACD indicator, and that is because the MACD is a lagging indicator. It uses historical price to provide new data to the chart, but the signals sometimes can be late and generate a lot of false positive signals. So make sure you are pairing this with another indicator and not only relying on the MACD. I hope you learned something on this week's Trader Tuesday. Be back for more.